Folks, Bob Desmond here over at the Contrarian Trader, and welcome to some video analysis of UPS stock. Is it a buy or is it a sell? So let's get to it. Let's talk about my past calls on stocks of late. UNH stock we call the bottom, CNC stock we call the bottom, MOH stock we call the bottom, Boeing we call the bottom, and we were buyers of 3 out of those 4. You go back further in time where nobody was interested in SoundHound. I did video analysis on it. The stock soon thereafter more than doubled within the next few months. So all of these videos are posted on YouTube. Go check them out. I'll link to my last UNH stock video on the back half of this video so you can view that at your leisure. So let's begin with what we're going to talk about today on UPS. I always like to go to the macro view, the very beginning. What caused this current bear market in UPS to start? And some may think that it is a corporate decision, and it could be. There are certainly many corporate decisions that were made that could impact the stock, but let's face it, when the stock peaked out was when the Federal Reserve paused on interest rate cuts and was rolling off debt off of their balance sheet, forcing yields to move up higher, slowing the economy. That's the macro view right there. Solely in and of itself, not the only reason as to why UPS stock had gone down. Other issues, corporate-centric, that came out, and I have some bullet points here. I'll display them right in front of you. January 2021, sale of UPS freight to focus on small package business. February 2022, stock peaks at $198 per share. 2022 and onwards, bear market triggered by inflation, rate hikes, macro uncertainty. And they should have added on to that the Federal Reserve rolling off their balance sheet. 2023, labor cost uptick, inflation again, Teamsters contract adds pressure. Early 2025, Amazon business halved. Tariffs and volume decline weighs on earnings. Q1 2025, earnings beat, but full year guidance withheld. Never ever good. Who did that? CNC, Centene Corp, UNH stock. What happened soon thereafter? Stocks plummeted. But that plummet ultimately resulted in a bottom in each of the stocks. Again, 2025, restructuring of 20,000 job cuts, network streamline, acquisitions in healthcare. So you can see that the proximate cause to the decline of UPS stock had to do with A, Fed policy, B, government spending, which triggered inflation, C, they changed their business model, and then they were hit with issues by the Teamsters resulting in even more wage inflation. So those are some pretty big weights to carry on the back of UPS, and they are trying to streamline operations, which is good to see, but is it enough? So my research led me to take a look at what's going on with management. So at the executive level, you saw a change in the CFO spot. That was in July of 2024, replaced by Brian Newman, June 1 of 2024. Did that help? No. They had to switch up in the board of directors. March 2025, Kevin Clark, CEO Aptiv, he joined the board. June 2025, John Marikis also joined the board. And according to their 2025 proxy statement, 6 new independent directors have been added since 2020, reflecting a 50% director refreshment rate over that period. Now, with all these changes since 2020, the question we need to ask ourselves is this: is this enough for the street to regain confidence and to begin building a position on an institutional level of UPS stock? I would argue the answer is no. You had a change in the CFO spot, which is a critical spot. Over a year ago, it did nothing. I think that you need to have a change in the CEO spot. Carol Tome, needs to go, needs to resign. And I think that ultimately, depending upon who they replace her with, that will be the ultimate flush out in the stock. If in fact it flushes out, it may not. Now, what I put in front of you are the pressures on the CEO to, in fact, step aside. There is a lot of pressure on her. You have the grassroots petitions, active petitions from employees and retirees calling for removal. Investor, employee sentiment, they're big owners of the stock here, Class A stock. Dissatisfaction is vocal, especially among retirees with voting power. Formal board investor action, no publicized calls for a CEO change by the board or major investors yet. Insider behavior, recent stock purchases by Tome. We'll go to that in a moment. I already knew about this, and I'll tell you how I knew about it. And by the board suggests confidence. Only one member of the board has bought, so let's not, one member of the board. So this is a little bit misleading here. Recent stock purchases by Tome, and the board suggests confidence in her leadership. Okay, we'll talk about that in a moment. And I think that it was a pretty sound move on the part of the individual that's on the board and by the CEO to purchase a stock at these levels. I mean, we'll talk about valuation and we'll talk about the technical analysis, meaning the charts, in a moment. So let me not get ahead of myself. So let's just summarize what we're looking at here. We understand now the catalyst of as to why the stock is in the place that it is right now. We understand that there have been changes in the company. They haven't been all that effective. We'll talk about the trend of revenues in a moment, and we'll talk about the technical analysis and are we at a level at which we can consider buying the stock as a swing trade and or an investment. And of course, we'll talk about valuation. And in fact, you know what, before we go to the chart, let's go to the valuation of the stock and let's get that in the rearview mirror. Now, what you're looking at here is the trailing PE of UPS stock going back to 2015. In orange here is the average. Let's call it at about a pretty healthy trailing PE multiple of it around, let's call it 22. We are trading at a discount, a major discount at current to the average. We're also trading at a discount to the S&P 500. Now, when we look at the forward multiple on UPS stock, you can see again up here, we sport on a 10-year moving average basis at around, let's call it 16, maybe 16 and a half. At current, we're down here at about a 13 handle on a forward multiple. So again, we're at a multi-year low. We are trading at a discount to the 10-year moving average. We're also trading at a discount to the S&P 500 on a forward-looking basis. Is there more room to the downside here? Absolutely. We saw it back here where we dropped down below 12 and a half back in 2018, 2019. So it's attractive. Is it a screaming buy on a trailing and forward-looking basis? Not yet. Not yet. I would be willing to step in and begin bull operations on UPS stock if it aligned with the technicals, meaning we had historical support on the charts that was saying, okay, now is the time to step in here because the valuations are at a historical discount versus the stock on a 10-year moving average, plus relative to the S&P 500. So you begin to get a collage of reasons as to why the stock becomes attractive. And when you take a look further at the price to sales of UPS, I mean, the argument here becomes all the more attractive to say that UPS is looking very, very attractive here on a price to sales basis. We are at lows going back to 2015 and certainly at a discount relative to its 10-year moving average. So price to sales, trailing PE, forward PE, all look very, very good here. And I'll tell you, the price to sales is really a hook for me. Now, we have one other metric that we want to talk about, and that's price to book. Let's bring that up. Okay, so on a price to book basis, it's really hard here, given the spike outs, to get a vibe for how we're trading on a price to book. But the knee-jerk reaction here by me is to take a look at the stock on a smoothing basis, meaning a 10-year moving basis. And clearly, we are trading at a discount to the 10-year moving average, and we appear at a reasonable level going back historically to historic lows on price to book. So I think that we can make the case here that were we to hit historical support levels on the charts, and were we to have, in particular, a catalyst, what does that mean? A catalyst means that you have a change in the CEO spot. That's where I'm pointing my finger right now, because I think that the CEO is most vulnerable right now. Let's face it, the stock is down just shy of 60% over the past several years. So you've had the CFO leave over a year ago now. That hasn't done much. So I think that at this point in time, the CEO is certainly going to be a person to look at to make a change. So the value in getting that change at the helm is that what happens after you get a CEO change is you get what they call a kitchen sink quarter. What does that mean? Okay, so let's pretend we get a CEO that comes in, great credentials, certainly capable of taking on a role of a major company like UPS. So what that CEO, like any other CEO, is going to do is they're going to give out orders to every single one of their executive vice presidents that you will go to your divisions and you will dig up the dirt on each one of those divisions, and we are going to announce what we're doing to fix those problems at our next quarterly news conference. We are going to throw everything out. Anything that's bad that we've been hiding all these years is coming out, and the stock will generally react very, very negatively. That's the time to buy. That's the time to get overweight, because the company just told you, listen, this is what we're going to do. This is what we've been hiding. This is what we're going to do about it. Now you know what you're dealing with. And then when the street has visibility, they can then say, okay, now it's time to begin bull operations. But by then, you should already have a position in the stock. So that leads us into taking a look at the charts. Let's take a look at the chart of UPS. Let's also talk about the seasonality, and let's talk about what Congress has or has not been doing, because we're able to, with TrendSpider, take a look at what the insiders are doing, what Congress is doing, as well as what seasonality is telling us might be happening in the next several months. So let's get to it. Okay, so here's where we begin. It's a blank chart, a monthly chart of UPS stock. The trend is clear, it's defined, and as you know from taking a look at my other videos, I have been using TrendSpider to identify bottoms and tops for quite a while now. We did it again, SoundHound, Boeing, UPS, CNC, MOH. Those are the most recent macro calls that we've made, and we're going to try to make that same effort right now with UPS. So let's get started. And if you're interested in the value that TrendSpider brings, please use the link below on YouTube, link above on Facebook, Twitter, and get my 35% discount, CON35, again, CON35, and take advantage of this excellent functionality. So I like to begin with a monthly chart, especially since I don't track UPS all that often. It gives me a vibe for where we've been to appreciate where we might be going. So what are we dealing with here? We're dealing with a trend that is clear, it's defined, it is down. Okay? The street was telling you right here, August of 2023, you needed to get out. If you didn't get out back here, it's September of 2022. They held this thing for around 9 months, trying to hold this support level, which turned out to be a massive bear flag setup. So now what we want to do is say, okay, let's clear off the old and let's talk about what we're dealing with right now. We have the trend, which has pushed us down to the lower band of the declining downtrend channel. That to me is interesting. And you'll notice here that I have in yellow a line that goes back to represent historical support, because we have retraced nearly all the way back down to the lows of February of 2020. Think about it. We are just shy of retesting the COVID lows on UPS stock. What caused UPS stock to rebound? Monetary policy, fiscal policy. Is the government spending like drunken sailors? Absolutely right. Will they be cutting rates in September, October, November, December? I don't think they have a November meeting. Maybe they do. This is the CME Fed Watch tool. They're expecting a 73.5% probability of a cut in September. Be forewarned, this was nearly 100% only a few days ago. October, they're expecting nearly an 86% ease. This was higher, now it's lower. December, it's pretty much at current, a foregone conclusion. But you really can't rely upon these until you get only a couple of weeks away from the Fed press conference or Fed announcement. Now, as I mentioned earlier, November, there is no Fed meeting, so I was accurate there. So let's go back to the charts. So what had happened in the past is that you had, back here, you had monetary and fiscal policy. You had the Federal Reserve buying back Treasury debt, which they're not currently doing. They're rolling off debt off of their balance sheet. You had government spending, which they're still doing now, and you had the Federal Reserve cutting rates, which they're not doing now, but they're expected to. So would I buy the stock based upon what the Federal Reserve may do in the coming months? Not quite yet. Not yet. I don't want to get too far ahead of ourselves. I want to do a deeper dive on the technicals first. I'm going to take off my drawings here for a moment. These are my manual drawings. Now I want to overlay the algorithms. These are the automated trend lines that TrendSpider is so famous for. And here you have it. So you could see here that we do not have historical support immediately below, with the exception of the fact is if you add my support level here. And it's a pretty good support level, to be honest with you. Now, the problem I see here with UPS remaining on this monthly chart, but what I'm going to do is I'm going to overlay quarterly support and resistance on top of the monthly chart. You're not going to get this with any other software. So let's do that. I'm going to click on multi-time frame analysis. And what I just overlaid for you was quarterly support and or resistance in dash line, and in solid line is the monthly chart, because that's the primary chart that we're on at current. What did we do last quarter? We smashed through historical quarterly support like a hot knife through butter. What are we doing this quarter with just over a month left to go in the quarter? We rallied back, did a retest. We were rejected at that retest mark. So automatically, I have to say, okay, I've seen this show before, and I don't want to get ahead of this chart yet, because what it's telling me is that we have a resistance immediately above, right at $89.41. So where is my historical support? Right down here at $82.89 at last tick. The last trade on UPS was $86.44. So we're not that far away from a very, very significant support level, which you'll note if you go back to 2020, May of 2020, my manually drawn support level coincides with monthly support in solid green, quarterly support in solid green, another quarterly support level. You have three quarterly support levels and one monthly support level, all combining at $82 a share, give or take a dime. Let's drill down further. And if you're wondering, yes, I do send out alerts to members when we build or add to a position or sell a position. Now, looking at the weekly chart, how are we looking thus far? I think that we need to break. I think we need to go lower here, and we need to retest this support level going back to 2020. Now, at current, the overall equity markets are coming under a bit of pressure. They're waiting for the Jackson Hole, Wyoming speech tomorrow with Jay Powell coming out. They've already floated a trial balloon that he's going to cut in September by a quarter basis point. To me, big yawn. It takes at least 6 months for the first rate cut to work its way through the economy. Also, longer-term yields are ticking up. That's a problem. That's a major problem because remember, if you go back to September of 2024, when Jay Powell cut rates by a half percentage point and then 2 subsequent rate cuts, quarter point rate cuts, longer-term yields didn't go down, they went up. So what that leads me to believe is that they're going to need to do what you call yield curve control. Let me show you what that looks like. So if you go back to the financial crisis back here, you come back here to COVID, and even here, when you had the regional bank blow up, you had more banks blow up here than you did back in the financial crisis, yet the Federal Reserve did as they always did. They stepped back in and they began buying longer-term debt. They're the buyer of last resort. Right now, as you can see, they're rolling off debt off of their balance sheet. They're not increasing their balance sheet. So that's the only way they're going to be able to get longer-term yields down is to begin the printing presses again, printing out money and buying back the debt from the Treasury, so that way the federal government can continue to spend like drunken sailors. So the strategy here is quite simple. And we'll follow up with the members on our strategy with this stock from time to time. If you're not currently a member, sign up for our 14-day free trial offer. It's free, 14 days. Cancel if you don't like it. So we know we have a rejection here. We know that we're trading just off the lows of the week. We have 2 support levels immediately above. I would begin bull operations on UPS at around, I think I said 84 before. I'm going to lower that to around between $84 and $83 per share. That is our primary target, number 1, for UPS. Now, what may change our opinion here? Let's go back to the monthly chart. Actually, a quarterly chart. Now, if by chance we manage to buy, remember, we have just over a month to go in the quarter. If we manage to rally here and close back above, let's call it $90 a share, big round number, $90 a share. If we're able to recapture that support level, I would be a buyer. Now, what I'm looking for is a move lower to around $83 to $84 per share. I would begin bull operations. I would begin accumulations. And if we did get a rally and a close back above $90 per share, I would begin to buy more aggressively because that is a significant recapture of a support level if we close there. If we close there, if by the beginning of day 1 of Q4, we're trading down below this line in blue, I want nothing to do with UPS stock in terms of being aggressively a buyer until such time as we retest support levels. Now, if the market does begin to weaken up here even further, you could see UPS fall victim, but I think it's going to fall less of a victim due to the fact that UPS is not overvalued. The rest of the stock market is extremely overvalued. Its most overvalued level going back to, guess when this stock peaked out? Back in 2021. So that's my take on UPS stock in terms of the technicals. Let's take a look at what seasonality the stock historically does. Again, this is all included with whatever TrendSpider package you get. The month of August is not a great month for the stock. And you're feeling that this month. This data goes back 26 years. However, September and October get a little bit better. It's a coin flip type month. But November, just like the rest of the market, S&P 500 triple Qs, November is typically the best month out of the year, with July being the second best for the overall markets. The second best month for seasonality with UPS is the month of March. Now, when we take a look at this on a weekly view, you can see that the next few months grind up higher, and then we hit a trough. So I'm feeling pretty good that we're nearing a point in terms of technicals and in terms of seasonality where we could begin bull operations on UPS stock. Not right now. Please, if you're watching this right now and you're new to my videos, you know I don't go jumping all in right away because I make a video. I have no position here. I don't plan on having a position here for the next several days until the price comes to us. Remember, the phrase I always like to use is that weak stocks tend to get weaker. Strong stocks tend to get stronger. Now, in terms of insiders, here is Carol Tome. Yes, on August 1st, she bought $1 million worth of stock. How is that relative to her net wealth? How is that relative to her current position size? I don't know. Here is the SEC filing. And of course, as I mentioned earlier, you had a single director. That search that came back from my analysis said the board is not buying. One board member is buying $432,500 $500 worth of stock. $432,500 worth of, stock. Now, what I like to do as well is take a look at what's happening now down here. And I like to take a look at what Congress is doing. And you can pay big money for this information with certain vendors out there. This is all included with TrendSpider. So here are government trades in excess of $15,000. Let's customize this, drill it down to just UPS. I've probably done that on this video. I've done so much analysis on UNH. I apologize if I have done that before. UPS. Okay, so in terms of buyers, we only have one congressman out of Louisiana, Jefferson Shreve. I've already done my analysis. He sits on the House Transportation Committee, so he's got a lot of knowledge of what's going on inside of these companies. And his purchase is back in May, so it's fairly recent. Other than that, not a lot of buying or selling for that matter. So I would keep an eye on Jefferson Shreve and what he is doing right now. He's down big on his trade by about nearly 36%. And that is it, folks. In summary, I'm bullish on UPS. I think that we're coming closer to an end, because I do believe that at some point in time, the company's going to have to make a change at the top. And typically, that brings volatility, could bring a washout. We could hit our support level at around $83 per share, and then we could begin bull operations on UPS stock. We know that the company is valued reasonably, especially when you compare it relative to the S&P 500 and the triple Qs, which are extremely overvalued. So our strategy is to nibble at support, build a position that we're comfortable with. If you're building a position and the stock continues to go down and you can't sleep at night, well, you bought too much. Lighten up. And then as we begin to recapture support levels, especially on bad news. If you see bad news come out, meaning change of CEO, it's going to occur right away, and the stock goes up, guess what? That's probably your bottom. You may get a rally. Then on that next quarterly meeting, you get that kitchen sink quarter where they throw all the bad news out. You may get a sell-off. That's going to be your high or low. And you can get your double bottom setup, your W formation, and that is the beginning of your rally. Taking a look at this chart right now, it looks like heck, but you have to look at this through the realm or the eyes of guys like me, and we see it's a train wreck, yes. We see a lot of panic. And these are big institutions, and you still have a lot of shorts that are shorting this thing. Look at the short volume here. Let me go back to the monthly chart. This is not short interest, but short volume. I mean, the shorts are still actively trying to short this stock and beat it down. It's good information to know. And I think you're going to need a kitchen sink moment because with all the changes, their revenues continue to decline. This is why I think that the CEO is so vulnerable, is that revenues are not going in the right direction. So, and this is indicative of sales, right? So she implemented a strategy. That strategy is not resulting in additional sales. You could say that, well, she's doing cost cuts, she's doing this, that, and the other thing. That impacts the net margins. If she's got to pay off employees that are being laid off with packages, that's going to reduce margins. That should have nothing to do with sales. So this number here, the revenues, that is the purest metric that you could look at in terms of as to whether or not a stock is doing well or if it's not doing well. Is the turnaround story here working or is it not working? It's struggling at best. So I hope you enjoyed this analysis. Don't forget, we go live every Sunday night, so please hit that notification bell. I do believe the equity markets are under pressure here. I have a diagram below that'll show you all the key support levels on the triple Qs of which we are currently short. It's free. Take advantage of it. And don't forget about TrendSpider. Get my 35% discount using discount code CON35, CON35, link below on YouTube, link above on Twitter and Facebook. And take advantage of that deep, deep discount. Everybody have a profitable trading day. I'll talk to you soon. Be well.